Welcome back to another weekly market and financial update. I want to talk a lot about what's been happening in the overall economy. I know we missed last week's video because it was relatively a quiet week, and I wanted to really wait until we heard from the Fed because the Fed made their interest rate decision last week, and I wanted to wait until the CPI numbers came out. So let's talk about all of the headlines that are happening and what's going on in the markets. So I think some of the biggest headlines that most of us have probably been seeing are, of course, around tariffs. President Trump has said that he's going to give China a 90-day reprieve on tariffs, and China has reciprocated and also said they are going to give the United States a 90-day reprieve on tariffs. The tariff levels, they were at like 145%. I think they're down to about 10% now on both sides. So this was really welcoming news to the markets. The markets are reacting very positively to this. I know over the last 30 to 45 days or so, the market has been very volatile. But if you look at the markets today and where they're at year to date, markets have actually basically recovered all of their losses and are pretty much flat for year to date, with most indexes actually reporting positive over a 12-month period. For example, the S&P 500, when I last checked, it was year to date up about 0.4%. Over the last 12 months, it's actually up about 12%. So again, somewhat headline driven here, but overall good news for the markets. Now, one of the bigger pieces of data that came out is the CPI, or the Consumer Price Index numbers, which is really a leading indicator of inflation. The CPI numbers are at the lowest they've been since 2021, which is basically 4 years ago, which is pretty crazy to think about. And they came out in April being at 2.3%. And if you exclude food and energy, they're at 2.8%. So the overall number is 2.3, minus food and energy is 2.8. And I'm going to put a chart on the screen so everyone can sort of see the trend. We see the initial upward spike, which of course is during the pandemic and right after the pandemic, and the slow trickling down of rates since then. Now, we know the Fed met last week, and in spite of the CPI numbers being relatively low this week, the Fed last week decided to hold rates steady. And why was that? Well, part of the reason was they didn't have the CPI numbers yet. I think they were really waiting for those figures to determine their next course of action. And the second component is President Trump only yesterday, or this morning, I should say, really announced the reprieve on the tariff to China. So the Fed has been very cautious about lowering rates, when to lower rates, how much to lower rates by. And I think that they really have been holding rates steady because of all the trade wars talks and tariffs and what President Trump is doing. And they just don't know what the long-term effects of some of these tariffs are going to really be, especially because they've been changing so frequently, right? President Trump will say one day that he's implementing high tariffs, and then the following week he's saying, yeah, we're going to back off these tariffs. And part of it is definitely a negotiation tactic on his end, but it's not giving the Fed a lot of clarity of where interest rates are ultimately heading. And I think they're concerned because they really made this mistake during the pandemic. Was they really should have started to raise rates a lot quicker than they initially did. And I think they've learned from this mistake, and they're saying we don't want to lower rates too quickly and end up in a stagflation environment, or an environment where inflation really starts to heat up again and they lose control over monetary policy. So I'm not overly surprised that they held rates steady. Again, I've sort of been predicting that if they do make a rate change, it'll be probably early to midsummer, which the next opportunity for them to lower rates, if they choose to, would be when they meet in June. And I think there's a much more likely chance of them lowering rates just slightly, knowing that the tariff reprieves on China and vice versa is over a 90-day period. They may still hold out, right? Because 90 days are 90 days. Those 90 days won't last forever, and it's likely that something is going to change at the end of the 90 days. We don't know what's going to happen, right? There's no indicator of one direction or another of what's happening with tariffs. again, we really don't know. The Fed sort of feels the same way, is that, hey, we really don't know what's happening. We are feeling much better about the CPI numbers coming down, but we don't want to run the risk of lowering rates too quickly and then the economy heats back up all over again and we're in the same position that we were in 2021 as we are today. So again, I think that's really where the Fed is going to ultimately make their decisions. Is I think they're just going to play the wait and see strategy card, and ultimately, like I said, they're going to wait and see what happens and what President Trump does. And I think even despite of tariffs, if CPI continues to be low, I think there will be a good case for them. If not the summertime, maybe the fall, there will be a good case for them to lower rates regardless of what's happening on the tariffs environment. But again, we'll just sort of wait and see. That's of course a few months from now. It's only May, but overall, I think the economy is still healthy. It's definitely slowing down. I mean, we can see that, right? The markets year to date are flat. A lot of it has been volatility due to the uncertainty around the tariffs, but overall, I think good news. Again, we talked about earnings a few weeks ago. Earnings reports for most companies look good. Unemployment still looks good. So we here at Vision Retirement also want to see some more data points trickle in. The May CP or the April CPI numbers that were just reported for May are definitely very encouraging. I think that's a really good sign for us as advisors to say, hey, we know that inflation is getting more and more under control. And we'll just continue to watch and see what these numbers look like. I think June is really going to be a big inflection point of what happens with the Fed, whether or not they continue to hold rates. If they continue to hold rates, it'll tell us that the economy is still somewhat fragile and they just want to ensure that it remains as stable as humanly possible. If they do decide to lower rates in June, then I think that'll be a good indicator that the economy is heading in the direction that the Fed wants it to, knowing that it's slowing down to give it a little bit of juice to try to maybe accelerate toward the tail end of the year or early 2026. With that in mind, that's all we have for today's video. So thank you so much for tuning in today. And I look forward to seeing everyone a week from now with another update. All right, take care.